The Fed minutes came as a slap on investors' face yesterday as they showed that some Fed members thought that keeping interest rates high for longer may not be restrictive enough to tame inflation in the US. So happily, Nvidia announced just another set of blowout quarterly results and higher than expected forecasts as well for the current quarter. So while the US futures are trading higher at the moment despite higher yields in the US dollar gains, but sterling gains more than the dollar on vanished hope of seeing the Bank of England cut its interest rates in June after the British PM Sunak announced a general election on July 4th. Yesterday as a surprise. So welcome. This is Swissquote's Daily Market Talk. See, when the Fed President Powell said at his latest post-FOMC press conference that the Fed's next move will probably not be a rate hike, a statement that brought enormous joy and happiness to investors, remember? Well, he was, in fact, referring to yet a hawkish discussion that the Fed members apparently had during a meeting where, well, many of them just questioned whether the high for longer race rhetoric was restrictive enough and if hiking the interest rates might be a better idea to fight the heating inflation in the US. So happily, the minutes came out after last week's CPI data showed a slowdown in the US inflation because the contrary would have been dramatic. So yesterday's unexpected twist from the Federal Reserve's meeting minutes sent the US 2-year yield to the doorstep of the 4.90% level and also eased appetite for the S&P 500 and Nasdaq stocks near their all-time high levels. But happily, Nvidia came to save the day yet again yesterday with another round of better than expected quarterly results and better than expected forecast that it announced after the bell. So this is perhaps why we see the US futures back in the green this morning at the time I'm talking here. So Nvidia's first quarter sales hit $26 billion US dollars, again $2 billion US dollar more than the company's own forecast of $24 billion US dollars, and more than the analyst estimates of a little bit more than that as well. And the company said that they expect to make $28 billion US dollars during the current quarter. So if we rely on the forecast beat pattern of late, well, Nvidia sales could hit the $30 billion US dollar mark by the end of this very quarter. And that is not all, because Nvidia is also expanding its business beyond chips. It has a new software platform called NIM that offers an AI ecosystem, the AI ecosystem, including a set of easy-to-use microservices for accelerating the deployment of foundation models on any cloud or data, they say. And because this software licensing model is 100% profitable, well, it basically opens the door to a better profitability for Nvidia as companies from all type of sectors rush into AI these days. And last but not least, Nvidia will opt for a 10-to-1 split of its stock to boost demand as the price of one share of Nvidia is now flirting with the $1,000 US dollar psychological level. So all in all, Nvidia jumped 6% in the after hours trading, but note that the knee-jerk reaction has been softer than one would expect. The expectation was around an 8% move after the earnings announcement, remember. So the stock price will certainly hit that $1,000 US dollar per share mark, but whether it could stay there is not necessarily a given, because apparently investors just got used to blowout results from Nvidia, and even a comfortable beat is, well, not enough to give them this high that, well, people were looking for. So that's a bit worrying for the future earnings announcements for Nvidia. It has to do just much better now, but it is promising for the extension of the rally toward other names, because keep in mind that new names are popping this week and making their way to the top of the AI developments and AI headlines, and Qualcomm is just one of them, as they will be powering Microsoft's and Dell's AI-focused computers in the next few months. So if you want numbers, 50 million of these AI computers are expected to be shipped over the next 12 months. And that's a huge number compared with the 250 million unit worldwide market. So if you're fed up with Nvidia, well, Qualcomm also feels like a good bet at the moment. Its share price just surged about the $200 psychological mark yesterday, and the company has a PE ratio of only 26 compared to Nvidia's 55 as of yesterday's close. And well, speaking of chips and central banks, well, note that the Bank of Korea kept its monetary policy rate unchanged for the 11th consecutive monetary policy meeting today and revised its growth forecast higher. Now, the Korean won gave a little positive reaction to the Bank of Korea news this morning, but that's not what I want to focus on right now. I want to bring up the fact that the country also announced a $19 billion worth of support package for its chip makers to narrow the gap with the international competition, like Nvidia, for example. So Korean chip makers make up almost a fifth of the country's exports, but they stand for only 1% of the fabless market share that they would like to get a bigger share of, obviously. So fabless refers to a business model in the semiconductor industry where a company designs and sells hardware devices and semiconductor chips, but outsources the actual manufacturing of these chips to a specialized manufacturer known as a foundry. So the term fabless is a combination of fabrication and less, indicating that, well, the company does not own or does not operate its own manufacturing facilities. And Nvidia, for example, is a fabless company because, well, it designs its own graphic processing units, but relies on companies like TSMC to produce the actual chips. So these models allows companies like Nvidia to focus on research, on development, and on design of the chips while leveraging the advanced manufacturing capabilities of founders. So voila, if you want to diversify your chip portfolio beyond Nvidia and Qualcomm, well, the Korean Samsung Electronics could be a good candidate. And note that Samsung Electronics has a PE ratio of around 27 compared to Nvidia's 55, as I said before. So that's it for chips today. Now, elsewhere, in a surprise decision, well, the British PM Sunak announced yesterday a general election on July 4th in the UK, which is way earlier than expected. Now, there are obviously several discussions and chatter regarding why the heck is he rushing to a general election while the polls show more than 20 percentage points lag with the Labour Party, but I won't go into that detail. Maybe he's just scared that inflation in the UK will pick up until autumn and he will lose his "we pulled inflation in the UK to normal levels" rhetoric, but I will just say that the fact that the UK election is due on July 4th, so it's just like in 6 weeks, combined with yesterday's hotter than expected inflation print, will actually washed out the expectation of a June rate cut from the Bank of England. So cable is pushing higher above the 1.27 level right now, but I maintain my view that the upside potential in cable will likely remain capped as, if nothing, well, the uncertainty surrounding the UK's upcoming general election will most probably tame appetite for sterling in the next 6 weeks. So this is all for today. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.